Remember that one time that $34.4 trillion fell off the face of the earth in 2008? Well, that's the power of the stock market for you. But with barely over half the US population investing in stocks, how can the market affect everyone in such an intense way? The stock market is a basic but powerful tool for fundraising. Companies looking for more money fundraise by going public, which means offering an IPO, or initial public offering. Basically, the company decides it's going to sell shares of itself to whoever wants to buy. It's like Shark Tank times a million. A share of stock is a single piece of ownership in a company. The shareholder, the person who buys the stock, is literally a part owner in the company. So technically, yes, I do own Nike. It's no big deal. It's whatever. So let's say Offprint needs to raise money. But seriously, I'm kind of broke. If we decided to offer 1,000 shares at an IPO of $10 per share, selling everything would make us $10,000 like that. In market terms though, this is an incredibly small example. Check this out. The Chinese company Alibaba recently IPO'd at $68 per share. And guess how much money they made that day? $25 billion. Also, our example is really small with 1,000 shares, considering Google has 680 million shares out there. So what's next? Now that the company has sold the shares, they already cashed in and don't gain or lose money on the stock anymore. However, shareholders can make it big or lose it big. Part of being a public company means dividing up your profits among shareholders and paying them as owners. So if you own a stock in the company, the more money the company makes, the more money you get paid as a shareholder. These are called dividends. And the more money your stock makes, the more people want to buy it from you. And the more people who want to buy it, the more money you'll be able to sell it for in the future. You buy stocks in hopes that the company does really well, and other people see the value in your stock and want to buy it from you for more than you paid for it. It's exactly like what happened with Beanie Babies. Oh, wait, those are still worthless? If you're thinking of investing in the market, do your homework first. Find good companies that you believe in and would be proud to be a part owner of. Remember, it's an investment, not a gamble. All in all, people don't realize that Wall Street and Main Street are just two sides of the same street. When the stock market is doing well and companies are hot, lots of people are cashing in on those companies. Those companies will then typically expand and add jobs to the economy or boost wages. On the flip side, a bad market means people and companies are losing money, and companies have to make up for those losses through wage cuts and layoffs. It's a risky setup, but historically it's been one of the most successful experiments of all time. So yes, it may be true that only half the US population invests in stocks, but the stock market directly affects anyone who's interested in making money or wants a job, which tends to be right around 100% of us. Hey guys, thanks so much for watching this Offprint video. Make sure to check out some of our other videos as well as our website, offprintmedia.com, where you can find current events and other explanation-based videos and articles, as well as subscribe to our bi-weekly email update, full of the week's most important happenings from around the globe in a way that you can not only rely on, but enjoy as well. Thanks for tuning in to Offprint Media.